Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. It's time to welcome in Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. Ross, thanks so much for joining the show.
Hey, thanks for having me.
Great to have you. All right, Ross. So I don't know if you just heard my last two guests, but we've had some kind of caution heading into next year. Still the potential for a Santa Claus rally here, but we had one guest basically turning pretty cautious and pretty bearish on some of the things that have been working this year. And then we had Sam Stovall, who basically is bullish with a capital B, as he said, a 7% gain for next year. When you take a look at this market and see how far we've run, and even just look at the November gains, obviously the market mostly lower today, but the Russell's up 10%, the Dow's up 7%, S&P up 5%, NASDAQ up 4%. Is this a market that you think can continue to power higher?
I love this market. I get the valuation argument, and certainly valuations are extended, but look at the fundamentals behind it. Just because earnings estimates are wildly low for next year doesn't mean that the market's wrong. It means that the analysts are wrong. They have not taken into account the pro-growth environment that we're going to see, the change in animal spirits of the consumer that almost happened instantly after the election. Literally, we saw the economy pick up just because of just the election being over. People were so exhausted by it. But there's no question that the pro-growth, low tax policies, lower interest rates combination means that whatever earnings estimates you think for next year are probably way too low. So the market might seem expensive today, but actually I think the analysts are just wildly underpricing what the potential of the economy is.
So when you say the fundamentals are strong enough to justify these valuations, you expect earnings to actually come in better than expected? Is that what you're saying? Just the expectations are too low at this point?
I don't think the analysts have adjusted for the Trump presidency. They have not thought about what the economy will look like in a year, because what we're really going to see is a continuation of growth from a GDP level, macro level, and we're going to see a little bit higher inflation than what I think, and higher rates than what people originally thought. So the interest rate game, sort of play is what really isn't going to work. Betting on bonds is probably not going to make you a lot of money compared to the stock market. But this is an ideal environment for equities. Now, I've been in the market for over 30 years as a professional. So a lot of these people just don't remember the 90s where we had 5 years in a row of 20% gains. I lived through this period of time as an investor. So it hasn't happened in 30 years. But certainly the best we're going to get out of Trump is on the short term, not the long term. So if you're an investor, the next year to me looks like the best opportunity. And then after that, boy, things could get dicey with trade policy and geopolitics and just craziness. So right now you got to make money when the money's good to be made.
Okay, one area that is making some money today is Bitcoin. It's surging higher again, up getting closer to 97,000. Would you be a buyer at these levels, Ross?
Well, we've been cautioning, we've been getting calls, of course, every time Bitcoin hits a new high, that people start calling, wanting to buy Bitcoin at the new high. And what we've been cautioning people is Bitcoin is a highly volatile, high-risk asset that has gone down substantially many times in my life of 10 years of experience with Bitcoin. I've never sold a Bitcoin since I bought one for either my clients or myself, and that's what I recommend. So if you're a long-term holder of Bitcoin, you absolutely need to own it if you can stomach the volatility, but it's definitely not for everybody, and you don't need to have it. Now, in my ETF GK, we have a 4% position in Bitcoin. So if you want to have exposure to Bitcoin and AI and technology and all the other investments we have, GK is a wonderful option for you if you're new to Bitcoin, but it's a highly speculative asset and it's not for everybody.
All right, so another big post-election winner is Tesla.
Yeah.
And I know you were previously a Tesla bull. I mean, just to point out, Tesla's down about 5.5% this week, but up 33% in November alone. So fill me in, because I was trying to follow it. I know you were a bull. Seems like you became more skeptical on Tesla. Are you still a holder?
Yeah, I just want to separate. I'm a bull on Tesla, but I'm a bear on Elon. The issue I have is Elon, not necessarily Tesla. I love Tesla. It's a wonderful company and we own it. It's moved up now back to our number 2 position inside the firm GK, but not in my fund. So I'm kind of torn because I'm an EV climate guy, and that's what I think Tesla's best at. They still make the best vehicles and software in the world. This pivot to robo-taxis and robots is going to take years to come to fruition, and who knows when or if it'll be profitable. And that's really the risk, is like they're not a first mover to cyber cabs or whatever. I'm taking Waymo now, and Waymos work great, so they'll be years behind in robo-taxi. And with robotics, I'm not convinced humans are going to buy robots to put in their houses. I just am not convinced people are going to do that. So, this is a highly risky approach. Now, the fact the stocks moved up because Elon bet on Trump and won and became sort of like vice president of the United States by buying his position there is certainly beneficial to Tesla, but not when they're talking about taking away EV tax credits. If they take away these EV tax credits, it's a disaster for Tesla. So don't be confused. Like, this is a really important thing for Tesla to continue to sell EVs, to continue to focus on climate, because it's going to take several years for any of this robotics stuff to play out. So as a Tesla shareholder, remember, you're down if you bought the stock 3 years ago. You're not up. So we haven't made money in years in Tesla, and we'd like to see the company move higher, but the valuation is extremely high.
But I'm confused because you say you're bullish on Tesla, you're bearish on Elon Musk, but you kind of made the case why you would be bearish on Tesla overall. So would you be a buyer on dips, or are you holding? What are you doing with Tesla right now?
Well, once again, if we apply the same multiple that NVIDIA has to Tesla, the stock would be half the value. So that's something to be concerned about if you're a Tesla shareholder. The valuation is extremely high, 100 times earnings, okay? So stocks go up when earnings go up. So, Elon has to sell cars for now, whether he likes it or not. And he's, turned off 2/3 of the traditional buyers of Teslas are liberal people in Europe and the United States. And who knows how this trade war with China is going to work out for Tesla as well. But Tesla makes the best cars in the world by far. The EVs and dealing with climate is one of the most important things we deal with in the world. Just because Elon's pivoted away from climate doesn't mean that that's not the most important issue in the world. And I get cuddling up with Trump is cuddling up with the oil industry, which is what Musk has done. That's why I'm not a bull on Elon, because he's not worried about the environment at all, it turns out. I'm still worried about it, okay? So that's why we invest in Tesla, and Tesla's the greatest climate solution in the world between batteries and EVs. We want them to sell millions of EVs and be focused on selling great EVs with great software instead of trying to become a robotics company.
Okay. All right. In terms of some of the AI trades, obviously you mentioned NVIDIA. That's a big winner this year. But if you take a look at a few big losers today, it's HP Inc. and Dell. Two supposed AI beneficiaries, but losing big after earnings. What's your take on those names? Would you be buyers on this dip?
Well, I own Dell, so I guess I'm one of those losers today on Dell. Fortunately, I had Bitcoin to offset it today. But Dell's a really good company in a transition, because what's happening with Dell and AMD is the same problem where AI business is growing, but the PC business has not. And this is a thing that hasn't happened yet, and Apple hasn't proven it yet too, which is getting consumers to go out and upgrade devices, and PCs in particular, to buy new PCs because of AI. And they haven't made the case that it's worth it to go out and spend $1,000 on a new PC just because of AI. And that's what's holding back Dell and AMD, for that matter, and their overall PC business. But one shouldn't extrapolate that out as any issue with AI. It's that they're diversified, very large companies that serve lots of things. Now, in Dell's case, we're bullish because SMCI has a lot of issues, and that's their main competitor making server systems. With a forward PE of 14 at Dell, it's kind of hard not to want to buy the dip here. So, we were buyers of Dell this week in my fund, GK. We'd be buyers, in the future. I can't tell you obviously what I'm going to do and not do. But that said, I think Dell is a core beneficiary in AI and computing, and they just haven't really. AI is just too new yet, and consumers really haven't bought into the story yet.
Yeah, not driving those AI PC sales just yet. I know another big position in your fund is Netflix, which is a winner today. It's been a huge winner this year, up 80%. What keeps you holding Netflix versus just taking profits here? Where does it go from here?
Well, this is what we were talking about this morning in my investment meeting, is this Netflix Tyson fight kind of just upended the entire industry of sports. Because what what we realize is when you look at data, it says 60% of viewing is still on cable. And what I think that this proved is that is inaccurate data, that basically everybody under 50 watches Netflix, like 100% of people across the globe, basically. And if you want to reach a global audience and scale, it turns out in sports, Netflix is a lot better than NBC or any of the traditional networks. And the massive viewership, not just domestically, but internationally, is what's so attractive to assets like the NFL that want to expand internationally in the NBA. So we have wrestling coming on to Netflix starting at next year. But what we're really, and we have NFL on Christmas Day, but what we're really going to see in the future is a lot more sports on Netflix and a lot more people signing up. And that's hugely bullish, because what it really turns out is that really nobody's watching cable TV anymore. And you saw that move by Comcast this week to spin off all their channels. And unfortunately, people watch streaming, and that's where the eyeballs are. And Netflix has the potential now to double their subscriber base when you look at the global markets, just through adding different sports assets and live entertainment. So when you look at the cost of making content, it actually, sports content, which is super expensive, really isn't that much more expensive than other content, but it drives ad dollars in a way that no other content does. And so this is a huge opportunity as Netflix grows into this live business. But as the live players realize, boy, we can do real well on Netflix and have a much bigger audience.
Yeah, they just have some kinks, technical glitches and buffering to work out. But even despite that, for the fight
it's
earlier,
just so many people, though.
a couple
That's
weeks
like
ago.
the greatest problem. Like they're good at this too. So you can imagine the demand when they're good at this, and it's still brought me down.
Yeah. I mean, and even despite those glitches, Netflix is up 16% this month.
Right.
All right, we have to leave it there. Ross Gerber, Gerber Kawasaki Wealth and Investment Management. Thanks so much for your picks and your sharing your insights. Really appreciate it.
Yeah, thank you. Have a great Thanksgiving too as well.